Afternoon, everybody. Uneducated Economist here. So in this video we are going to be talking about how the lumber market was giving you the warning signs of the actuality, the truth of what it is that's taken place within the economy. So many people have put it in their heads that the tariffs or the threat of tariffs or the coming economic recession or the problems that we are facing was going to send lumber to the moon. Like lumber prices were going to skyrocket. It was going to be impossible for anybody to build a house or buy lumber. And I swear to you that the mainstream media narrative had all got together to push this propagandized information, completely confusing the people, giving them no hope or no understanding of what it is that's actually taking place within the economy. And I've been trying to share the information with you the entire time to watch lumber. Lumber is telling you the truth. Lumber is showing you what it is that's really taking place within the economy. And I have been trying to share the information with everybody as much as I possibly can. Today, we are seeing the lumber prices dump out again, with the idea that lumber tariffs are no longer the critical point that's going to create this uncertainty and doubt within the building industry. They can no longer use lumber. Like, they tried to push that. They tried to scare the hell out of the people. They got the people to actually do a change to their business in an idea that they were going to try and put themselves in preventative situations, increasing their prices on not only their bids, but their retail prices. And it absolutely did not manifest itself, right? It did not show up. Now we have lumber prices that are incredibly cheap. We have mill curtailments, mill shutdowns, inventory depletions. We are set up in a very critical position when it comes to lumber, and nobody sees it. Literally nobody. Right? Every article that I tried to bring up talks about how it is that the tariffs are creating these problems within the lumber industry. That doesn't exist. That does not exist. It's not there. I don't care how much people try to imagine it being there. It doesn't exist there. The issue comes from demand. There is a lack of demand for lumber in this country, and it comes from the lack of builders, right? Or at least the builder sentiment. There is a buyer traffic issue that has taken place within the home builders, the new construction. And with that buyer traffic being an issue, their demand for lumber is going to be suppressed. That's it. Bottom line. Right? Until we actually see builders getting excited about building spec homes that are going to be selling into the future by having a buyer traffic there, until that moment comes, we are not going to see any demand for lumber that's going to start creating a situation in which that the mills would start bringing more inventory. They're not going to do it. Not at 500 per thousand, certainly not under 500. And this is the unfortunate situation we now face. So as I think about what it is that's actually happening within the economy, and so many people have this idea that these tariffs are going to absolutely destroy everything about their business practice and everything that they are doing. They're changing their strategy around. They're trying to figure out what it is that they need to do. We find out these tariffs may not even be legal. All right? So now what are you going to do about it? Because the idea that they may not even really be legal, we don't have any choice in the matter but to deal with it until October, when they finally decide that. So from now until October, what are you going to do? What do you think what do you think everybody else is going to do when you have this sort of idea that is now present within the economy? That the tariffs are illegal, that they can't even be here, the money may have to be paid back, and there's nothing that's going to change about this current situation until the middle of October. Tell me that does not create the fear, uncertainty, and doubt that they are looking for if you were to follow the credible threat theory. This is playing out so well. It forces people to make decisions that are completely superficial. There is no reality to this at all. And so when I think about it, when I look at lumber and everybody says, what is the tariffs going to do to lumber? And I'm like, nothing. What tariffs? What the hell are you talking about? That doesn't exist. I don't know where it is that people get this information, that the lumber prices have all of a sudden gone up on account of tariffs. That does not exist in reality. Lumber prices are getting cheaper by the day. And so when I think about how it is that people position themselves in accordance to this information, they are completely misguided. And lumber is proof of that. I have been saying it for so long. Follow the lumber market. The lumber market is telling you the truth. This market is suppressed. There's not a lot of demand for it. The prices are incredibly low. Right? Manufacturing of it is low. Demand for it is low. Inventory is low. Prices are low. This is not a safe market. This is dangerous. This is incredibly dangerous. Most people will not see it for the concern that they should. They are not heeding the warning. It has been screaming so loud for you to take the warning, and people say, oh man, that's nothing to look at. That's nothing. No big deal. You should be paying attention to the propagandized information about how it is that Donald Trump is going to take over the Federal Reserve. Tell me, how much are you going to invest into understanding what is truly taking place with things like the lumber market when you have such good entertainment being blasted over the mainstream media talking about firing Lisa Cook or Jerome Powell? See, this is how most people end up getting their information. They have no clue about the reality. They have no clue about what it is that's really taking place within this economy. And when you look at the lumber industry and you look at what it is that's actually taking place there, that is the warning sign. That is showing the truth. That is showing where it is that manufacturing is taking place, where demand is taking place, how financing is taking place. Right? This is all shows up in the lumber market if you know how to look at it. And since most people want to just look at it and say, oh man, you have no clue what this administration is going to do. They're going to do all these kind of crazy things. And I'm thinking to myself, no, they're not. They can say anything they want. The president can say, he can write a letter, he can do anything he wants. Right? Legality may be very different from what it is that he wants to do. He can write a letter saying, Lisa Cook, you're fired. Here you go. Right? And she could take that letter and go, there you go, Trump. Right? You can write the letter all day long. It doesn't mean that there is any reality to it. You know? And that's the unfortunateness that we now face within this country, is that most people do not see it in this fashion. They think that as soon as Donald Trump or as soon as the president says something, that it is just automatic and it's law. No, that's not the way it works. There's a constitution, there is a judicial system, there are courts. And when we find out what ends up happening with these tariffs, and I'm assuming that they will probably be struck down as being unconstitutional and illegal, what happens to all the collected tariffs? Okay? I mean, that's a huge what if. Don't know. I'm assuming that they're going to have to get paid back. Does that come from taxed money, or does that come from more debt issuance? Because I doubt tariff money went into an escrow account. Right? It was like, oh, that went into escrow. Just pull it out of escrow and pay it. No, I doubt that's what's going on here, right? Most likely, we're going to either have to tax or go into deeper debt in order to pay the tariffs back. That's not helping, right? It's not helping. And again, if we had followed the lumber market, you could have been very much in line with the idea that these tariffs are not what it is that people say they are. They weren't manifesting themselves in the lumber market. I said it from the very beginning. I was not concerned about it. I wasn't concerned before the threat. I wasn't concerned during the threat. And I'm not concerned now. Because prices are found by demand. It's not found by some person out there who decides that they're just going to go and throw a bunch of laws and regulations and issues into the mix and thinking that's going to do some sort of benefit to the economy. It doesn't work like that. It comes from supply and it comes from demand, and prices are found in between that. And if you give people the ability to take out debt in order to buy into a particular asset, then you're going to find those particular assets moving up in price until there's no more financing that's available to it. And then you have issues. Point being is this. All right, people say, why don't you get to the point, right? The point being is this. If you look at lumber, lumber is almost, pretty close, 100 domestic supply. Okay? Domestic labor, domestic input cost, from energy, labor, resources, everything is domestic. Domestic supply chain, domestic customers, right? Everything is domestic. And so when you think about what it is that we are facing for issues when it comes to the inflationary pressures, when it comes to the problems that we now face, it comes from the global economy, right? Creating credible threats, creating problems, creating issues, creating fear and uncertainty and doubt. And then what do you end up seeing from that? A result of fear, uncertainty, and doubt, which creates what? Problems within the market. Whether it's a drop in price from lack of demand or an absolute incredibly high price with people in fear of what it is that's going to happen in the future, and they're acting ahead of time to try and protect themselves. All right? Lumber didn't have any of that issue. So when I think about dollar destruction, when I think about the issues of global economies, when I think about all the pressures that we now face as individuals and what it is that we need to do, and you look at lumber and you think to yourself, man, how come lumber is not showing the same signs as everything else is? It's because everything has been pushed out there through propagandized information that now has the people acting in accordance to that propagandized information. This is how the credible threat theory works. That's why I was so adamant about following lumber, about watching the lumber market. The lumber market was going to be very telling about what the real situation inside of this country is. Okay? As many people say, well, look at this and look at these things and all these other, like, they can pinpoint all these little problems and issues that we now face within the nation through all these little different products and these little services and everything. And I think to myself, those are all limited. Those are all based off of people's perceptions. Those are all based off of what it is that people feel is going to be coming from the future. But one industry is literally off of the demand itself, and that is lumber. If you do not have a demand for it, they will not produce. I don't care what laws, I don't care what financing, I don't care what you do to change it. You can open up forestry. You can say all these trees could be cut down now. It doesn't matter if there's no demand for them. You can cut all the trees you want. It doesn't make it any cheaper for you to cut the lumber if the input costs through energy, through labor, through trucking, if all these things say, hey, we cannot produce this for any less than this particular price. It doesn't matter how many forests you open up. It has to be profitable. Profit comes when you have buyers. When the buyer says, yes, I want to be here, I want that house, I want that material, I want to participate inside of this right now, that's the demand we are looking for. It's non-existent and it's obvious within the lumber industry. You can't just lower interest rates and think that all of a sudden, boom, you're just going to have all this economic activity happening. You know how long it takes to actually start a house from the day that you decide that you want to build one? Like, if you already had the property, you already had the contractors lined up, you already had the financing lined up, you already had the permitting lined up, you already had all this stuff lined up, you're ready to go. Well, yeah, okay, maybe not take too long. But if you decide today, man, I think I want to build a house, do you know how long it takes to actually bring that house into fruition? Just lining up the contractors itself, if you are not already got the logistics of handling the contractors, or just even getting a single contractor who knows what they are doing. This isn't an easy game that just all of a sudden just fires back up. It takes time. It takes effort. It takes communication. It takes a lot to get into actually putting a house together. Now, if you're already in the game, well, that's a different story. But how many people are in the game right now? Very few. Just look at the builder sentiment right now. It is absolutely horrible. And that's due to the lack of buyer traffic. So you incorporate all this into together and you look at it and you think to yourself, man, once this particular industry changes, it will be a sign for the broader economy. It is going to be definitely showing how it is that the economy is doing well, how it is that people are very encouraged and active, and it's going to be a sure sign of it taking place within the lumber industry when it comes to the lumber demand. I can come out here every single day and talk about how it is that lumber is in curtailments and inventory depletions, and how it is that all these mill operations are suffering the consequences of it, and very few people would actually internalize it for what it really needs to be. And that is the sign of what it is that's taking place here in America, in the United States, in the broader economy, not just in the building industry, right? But in the broader economy itself. You think about it, building is probably the #1 domestic product that is produced. You think about it, it's like everything is domestic, including the product. The finality of the product stays here in the United States. It's like the ultimate when it comes to any manufacturing industry in the entire country. Building has got to be the #1, right? It's the most benefit to the people. It's in every way, right? It keeps most of the money locally. There is some that goes out of, through some of the little parts and pieces that do come in from foreign suppliers, the fixtures and things like that, but the majority of the house is almost all domestic. And so when you look at it in this fashion, you think to yourself, okay, if we were to have any kind of return to manufacturing happening here in the United States, it will happen in building first. Right? That's the first place. And if you don't have building taken off, if you don't have a demand for lumber, then you don't really have a very active or promising economy. You can show signs of it. Here, let's hand out a bunch of stimulus checks and everybody go out there and spend, and look at all the consumers back at it. What a resilient economy we have. And it's just like, you're really going to look at it that way? Like how much consuming, how much aggregate demand actually exists out there? That's how you're going to judge the economy and how well it's doing? Because there's a manufacturing base here too, and it's not doing that well. And if you want a strong economy, it comes from producing and saving. But we don't have producers and savers. We got consumers and debtors. That's the nation that we have here. So when they're trying to make the economy look good, well, they got to issue out a bunch of debt, and they got to get a bunch of people consuming. And when they say, hey, look at the debt issuance and look at the consumer and what a resilient economy we have, and then the people who really look at the situation going, yeah, but these home builders aren't doing well. What about that? That's not a very resilient economy. That's not a strong economy. In fact, that's showing signs of the opposite. It's showing signs that there is issues taking place within the economy, that people are having a hard time dealing with the economy. Because if things were going well, then the builders would be very active. And that's the unfortunate consequences we now face. So many people now got it in their head that if only Donald Trump could throw the independence of the Federal Reserve out the door and take control and lower interest rates, everybody would be happy again. And I think to myself, man, I cannot think of a faster ride to inequality than that. Like, I cannot think of a faster way to create a separation between the rich and the poor than to do exactly that. Lower the interest rates, create a situation in which more people can go into debt, and there will be a group of people out there who take a bunch of that debt and buy cash flowing assets, and the majority of the people will buy a luxurious experience, and we will find ourselves even more separated. That's the unfortunateness of it. Right? So as I think about what it is that's going to be taking place here in the future, and more people are probably going to be backing off on a lot of their economic activity as they just sit there and wait to see what happens come October. Like, are you going to be making major financial decisions right now, or are you going to wait till October to find out what the Supreme Court has to say about all these tariffs? Just saying. Like, would you buy a house now, or are you going to wait? Are you going to start a business now, or are you going to wait? Are you going to start investing in a way that says, hey man, I am totally cool with the tariffs either being here or not being here because I know exactly how to invest in that fashion? That's pretty cool. Like, a lot of people might know how to do that. Most will have no clue, right? They will not know how to see it for the reality of what it is, which says that everything was a credible threat to get people to move in a particular direction. When you see it, it's obvious. Right? How it is that the Federal Reserve was using their forward guidance, their signaling, how they use it today. You know, you think about it. Think about it in just this fashion right now. The reason why the Federal Reserve is saying that they are going to be lowering interest rates or not lowering interest rates is due to a conflict in the dual mandate. The labor market is weakening, and that's a problem for the Federal Reserve. They cannot allow this labor market to weaken. But then I think about it, and I'm like, well, wait a minute. Isn't this some of the best jobs numbers, best labor, like unemployment is the low, like some of the lowest it's been in history? So yeah, is it weakening? Yeah, but is it as bad as it's been in the past? Not even close. It's like, it's been way worse than this. In fact, if you look through history, it's actually pretty good. It's actually good, the unemployment numbers, comparatively. All right? And so I think to myself, well, if that's not really a problem, you're just pretending it's a problem, right? Saying it's a problem, could be a problem in the future, but it's not really a problem today if you just look at it through a historical chart. So then it leads you up to the tariff issue, creating inflation, which is now a superficial tariff because there's no legality to it. But they're going to keep it in place until October 14th and let the Supreme Court decide on it. So now I think to myself, the tariffs that are creating the inflationary scenario that the Federal Reserve is attempting to avoid is now illegal. It may just disappear come October 14th. And now the problem with the Federal Reserve and the inflationary pressure that is created by the tariffs is literally non-existent. It just goes away. I'm just curious. Okay? So now the problem with tariffs creating inflation may not be there. Right? We'll find out more come October 14th, but right now, it very well could be that those tariffs are not the issue, since they may just go away in October. And labor doesn't seem to be an issue, since unemployment is historically low. There's no issue, right? The dual mandate means that they have to keep low inflation with stable prices and full employment. What if those things are happening already? Why would they need to change? You see where I'm getting at here? This is how the credible threat theory works. The Fed is going to sit on their hands as much as they can. They don't want to do anything except for use their words. And it works. Look how swimmingly it works right now. I mean, for months now, they've been saying, oh, we're going to have to cut to support the labor market. And I'm thinking to myself, the United States labor market? This one with historically low unemployment, you have to support the historically low unemployment because that's a cause for concern? I mean, you have looked at the unemployment charts from the past. I mean, it's been way, way worse than this. But now it's a major concern for you? I find that very odd to think. Like, I don't think it's that big of a concern. They say it is, but that's not the reality, right? I mean, why would historically low unemployment be a concern? Right? The direction maybe, but not the current situation. So the labor market is almost superficial in their argument in saying that, oh man, we got a weak labor market, we got to support. And I'm like, no, you don't. You have a weakening from historically tight labor market. Like, that's not bad. That's not a bad sign. I mean, it's a bad sign in the sense that it's in that direction. And if it continues on that way, it could very well turn into something that's bad. But right now, it is far from being bad. Like, far from it. And you got the inflationary scenario that very well could just evaporate from tariffs being the problem, literally evaporate come October 14th. In fact, the problem might even get worse if we have to repay all that money, which I think would just be absolutely hilarious to continue to collect tariffs on this only to have to pay it all back. We don't know. Right? I'm not trying to predict, or I'm not trying to say anything like that. All I'm getting at is that for months now, since the beginning of the year, I have been saying it over and over again. What tariffs? What tariffs are they talking about? The threat of tariffs? The idea of tariffs? The possibility of tariffs? That's all lines up with the credible threat theory to get you to behave in a particular fashion, and it worked. It so worked. But it didn't work in lumber. Right? It didn't work in lumber because lumber is completely domestic supply. You can't screw with other nations with the lumber game. Like, you can try and screw with Canada, and that's the only country that you're ever going to be messing with. And considering that the demand for lumber is so low, if it was high, then it would be an issue. But the lumber demand is low. Canada's not an issue. If lumber demand was high, we would be absolutely reliant on Canada to deliver us a bunch of lumber. Absolutely critical. That's not the case right now. We got mills shutting down all over the United States, curtailing development, pulling back on inventory. There is so much room for supply. There is so much room for production to ramp up and produce right here in the United States. Go ahead, inflict as much tariffs as you want on Canadian lumber. We got plenty of room. We got plenty of room, right? It won't make a difference. I've been saying it the whole time, and I am the only one who I feel has been absolutely sticking to their guns on this. Everybody else throws it all in the air. Oh man, this is going to happen, that's going to happen, all this other what ifs and superficial stuff, and I'm thinking to myself, no, none of that stuff is going to go down like that. Not when it comes to the lumber game. You're going to see lumber prices coming down, you're going to see inventory coming down, you're going to see mill curtailments ramping up, and the moment that the demand picks up, it's over. You're going to see lumber prices shoot through the moon. All right. Hey, City Stars Production, man. Thank you so much for all the support for the channel, man. Especially with the $49, $50 super chat, man. That is so awesome. You, along with other research I've done, has helped me make good decisions for my personal economy. Thank you. I've been able to make profits and have good business outcomes with your knowledge implemented. Well, thank you, City Star Productions. You know, and this is the thing about it, is that once you have internalized it, once you have the ability to communicate it, when somebody says, I don't understand the credible threat theory, and you can kind of relate it back a little bit and you say, well, the credible threat theory really came from the fact that the Federal Reserve had achieved the lower bound of zero, the effective lower bound, and no more downward adjustments were able to be made inside of the Fed funds rate. And with a low neutral interest rate, that is the Fed funds rate neither accommodating nor restricting the economy, being very close to the lower bound of zero, the Federal Reserve was in a desperate attempt to try and create an inflationary scenario in order to make up from the previous shortfalls from that 2% target. Now, that is very confusing for a lot of people, but if you have internalized that, all this stuff makes so much more sense. Everything just all of a sudden starts to line up and make sense. It was just like, that's the reason why lumber prices didn't take off with the destruction of the dollar. It's because it wasn't dollar destruction that was creating the inflationary scenario. It was a supply chain breakdown. Now, did that give the opportunity for corporations to increase their price and gouge people? Absolutely it did. And they did it, and there was proof of it. Now, as I kept saying, that's not the real economy. Follow lumber. Lumber is going to be very telling of the real economy and what has taken place. And what do we see with lumber? All the prices came out of it. All that money printer go burr causes prices to go up, vanished. All those people who said that have no idea on how monetary policy works or how inflation works. It's sad. It's easy to just say money printer go burr, prices go up. What else do you need to know? Hey, that's pretty simple, but now you will have no clue how to position yourself and deal with the fact that lumber prices went back down to normal. Obviously, it couldn't have been dollar destruction. If the lumber prices are back to normal, it would have to be a supply-demand issue. Huh, I wonder who said that the entire time, right? And by being able to call that out at the height of the lumber market being at $1,700 per thousand, and saying, hey, all that is going to go back down to normal. And here we are, just over $500 per thousand, which is a price that we were paying for lumber back in 2018, right? Going on 7 years ago. There's no inflation in lumber. Disappeared. Exactly the way I thought it was going to go down. Once I figured out that the Federal Reserve was in a desperate attempt to create an inflationary scenario to save their monetary policy, once I figured that part out and I looked out there into the economy and I started seeing the way people were communicating and talking, and I said, you do realize you're helping the Federal Reserve right now. All this inflationary talk, all this hyperinflation talk, all this stuff about destroying the dollar, this is a benefit to the Federal Reserve. Nobody saw it. Nobody could see it that way. The people who had internalized it started making different decisions. They started looking at the economy differently, including what it is that they were going to be doing with their money. Right? And much like City Star Productions and many other people who have come to me and saying, dude, thank you for putting out all these videos. Thank you for being so adamant about monetary policy. Thank you for talking to lumber industry, showing the comparisons to how it is that people are engaging themselves within this particular industry as opposed to the rest of the economy, showing how it is that people could then use this information to position themselves. I cannot believe how many people have come to me and saying, thank you, man. Thank you for doing this. And I'm like, no problem. I will stick to my guns. I don't care how entertaining or how fun it is for other people to watch somebody else talk about the destruction of America and how everybody is going to be screwed over by the Federal Reserve and all their hyperinflationary talk about it. It was very entertaining stuff, and people made a lot of money on YouTube pushing out those kind of videos. I never changed. I mean, I might have done some fear-mongering, clickbaiting titles, but the contents of my videos never change. Ever. I don't bow down to the mainstream media narrative. In fact, I will push against it every single time I see the discrepancies from the reality of the situation, from what I see going on within the narrative. Knowing that as much as I do about the lumber industry, and I'm not trying to say that I'm some super smart individual when it comes to this particular industry, I just happen to be in the exact right location. I live in the Pacific Northwest. There's mill operations, there's truck drivers, there's loggers, there's other retailers, there's distribution networks. There is really no corner of this market that I can't see. There's people who are in this game who understand the lumber production unlike anybody else out there, but they don't understand the retail side. They don't understand the logging operations, right? I mean, they might understand it a little bit, but they're not talking with the guys on the ground saying, hey, we got quotas that, you know, a maximum amount that we're allowed to bring to the mill. When I'm listening to guys talk about that, the loggers, saying, oh man, I haven't seen this kind of situation. And I'm thinking to myself, that's not something you hear a lot about. I wonder how many people know that, right? Well, the people who drive the truck, the mill operator, maybe the logger, but unless they have a YouTube channel, where are they going to share that information with anybody? They don't, right? And so it makes it very difficult for people to then understand what's taking place within this lumber market. But to me, I'm thinking, holy moly, man. I just saw over the last few years a bunch of logging operations shut down production, like shut down shop, go out of business. Well, that doesn't leave a whole lot of logging operation capability. Like, if you're a logger, most likely it's a small time operation. And I don't know of any nationwide logging operations. All of them are small businesses. It's a handful of guys up in the woods cutting trees down and hauling into the mill. So when those guys go out of business, where do you find more guys to do that? You know, you don't, right? You got to already be in the game. You already got to know the equipment. You got to know the ideas. You got to have the labor, the skilled labor to it. Once that company shuts down, it's very difficult for them to just ramp up a new company and say, hey man, we can go into full operation now logging. It doesn't quite work like that. Knowing that to be the case is so different from a lot of other people who say, well, they're going to open up all these government lands. And I'm like, that doesn't mean anything. That doesn't mean anything, right? I mean, it does mean something to somebody out there, but for the reality of the situation, when it comes to lumber production, filling in the inventory gaps and all, it's not going to do anything, right? We already have logging operations that are shutting down right now. They don't need more land, they need more demand. That's what they need. Alrighty. Oh gosh, guys, okay, I gotta call it quits here in just a minute. I really went off on this one. Sorry guys, I wasn't trying to rant. I just kinda ended up just going off on a rant. Alright. Booze, beer, wine world is blowing up prices. The dollar will never be done to many retirement accounts. Well, and here's the thing that I find very interesting about it is like a lot of times when we see like stories of the BRICS nations getting out of the dollar, moving away from the dollar, abandoning the dollar, people get in their mind that the dollar is losing ground, right? This is kind of what we hear. That's not what's going on here, guys. That's not what's happening. The dollar is gaining ground. There is more debt issuance taking place in dollars, right? That's happening more. More debt issuance taking place in dollars. That debt issuance, whether it comes from the United States or whether it comes from some foreign entity out there that doesn't have anything to do with the United States, if there is a debt that is issued in dollars, that is going to demand dollars to pay it back. That is a major problem for the Federal Reserve. That is liquidity crisis in the making. And if there is a nation out there who says, hey, let's do a deal outside of the dollar, that is a benefit to the Federal Reserve. I don't know how many recognize that, but the Federal Reserve is in a position in which that they will be faced with a liquidity crisis where the demand for dollars will explode, trying to pay off the debt, and there's not going to be enough dollars to pay off that debt. At that moment, the Federal Reserve is going to scramble to try and produce as many dollars as possible. And if the only asset that they have to buy is the United States Treasury, what do you think is going to happen to the United States government when that takes place? They're going to be put on an unsustainable debt path. They're already on an unsustainable debt path that will solidify it, that will force them into one that they will not be able to recover from. I do not believe that the Federal Reserve will do that. But that moment is coming. And what the Fed plans on doing when that happens is anybody's guess. But from the things that I have read, I would not be surprised if they start buying the debt of a foreign nation, the sovereign debt of a foreign nation. That is something that Ben Bernanke said that they already have the legal authority to do, and he brought that up in a speech over 20 years ago. He knew that this moment would be coming. Right? 20 years ago, he knew it. I don't know how many people stay up at night thinking about that, but if I was to have any kind of major concern about what is going to happen to the United States and the United States dollar, it's that liquidity crisis that is coming. No doubt in my mind that it's coming. How the Fed deals with it, how the government deals with it, is anybody's guess. But I'm assuming that if we have tokenization taking place, we have central bank digital currencies, we have that sort of implementation of stable coins that are now used as opposed to cash, it's very well could be that the Federal Reserve will start buying the debt of a foreign nation and issuing out liabilities. It very well could be the case. All right. Guys, I got to go here. I define hyperinflation as 20% month over month like most do. The dollar won't see that. I'm going to buy a couple of Powerball tickets. Right on. Hey, Wayne, bro, real quick, just between you and me, man, if you hit the Powerball, you win it big, like really big, will you buy me a new pickup? Right? Just I don't even need a brand new one. Just like, you know, something 2023, 24. That would be pretty cool. Silverado, you know, be pretty cool. Thanks. All right. All dollars are created from debt. Yeah, that's pretty much true. You know, really, like a dollar, like even the moment that somebody says, "Hey, I owe you $100," and they sign their name to it, that can get used like money. Like they can, like the debt itself can be used as like a legal tender to do transactions with. Like it is not even a real dollar, it's a contract. I promise to pay you. You know? So, all right. Try not to get the COVID vehicles. Oh yeah, during the COVID shutdown kind of things. Yeah, I can see that. Debt creation is not dollars, though it puts demand on dollars, bringing up value of dollars if the dollar is not created. Yeah, but the creation of debt is dollars. I don't think you, like, I mean, I know we want to define the dollar as this particular unit or whatever, but if it does the same thing that a dollar can do, why wouldn't it be dollars? Right? Like if it can literally do the exact same job as a dollar, and we're just like, oh, but that's not dollars, but it's doing the job of a dollar, right? And if it's doing the job of a dollar, that means the demand for dollars is much higher than what people would ever have given any kind of credit for, because these contracts are getting used as if they were dollars. If they couldn't use those contracts for dollars, then the demand for dollars would be much higher in order to do the transaction, right? Because it's all about transactions. How do we get the transaction done? right? I don't have enough dollars. Well, can you just sign a contract that says you're paying dollars? Sure. Okay, transaction done, right? And now we got a contract that's worth money, right? And can be used like for doing transactions. I'm getting $1 million if you win. Hey Wayne, dude, that would be so awesome, man. I would really appreciate $1 million. And I would totally take it. But I'm gonna believe in the truck more, right? Like I want to manifest that truck or a Camaro. Like that's what I want. The $1 million, like I already feel like I already kind of have that. You know, I don't. I'm not even close, but I kind of already feel like I'm on my path to being able to acquire that. And so to me, like you would shorten that timeline up for me, but I don't necessarily have that vehicle in my mind. Like I don't have that quite yet because I got like this 97 Suburban and it's working out. So yeah, let's manifest that truck, that Camaro. That would be awesome. Or the $1 million. I mean, that would be cool too. All right. Yes, the Fed is reactionary. I don't think they are. I mean, if they were reactionary, then they would be reacting and not creating the situation that we now face. They wouldn't be deploying information. That's not reactionary. That is creating reaction, right? And this is the way I've been able to view the Federal Reserve for like 5 years now. You know, it was like, wait a minute, they want an inflationary scenario. How are they going to create an inflationary scenario? Extra low, extra long for an extended period of time? Well, that's not reactionary, right? They're not reacting, they're creating. Now we are creating a hyperinflationary scenario, pushing it out there through the mainstream media. Extra low, extra long, got to stick to the job, make sure that it's done, you know, all this other stuff. They're not reacting. They were forcing that outcome onto the people. All right, people say they're following the 10-year. No, they're not. They put out forward guidance out there. People start acting ahead of time. They start creating a situation in which that they're buying up bonds. The yields start to drop, and then the Federal Reserve cuts, and they're like, oh man, they're following the 10-year. No, they're not. They created the situation that people then started reacting to, and then they put themselves in position. How many times did you hear that the Federal Reserve lost control over interest rates when you saw the mortgage rates ticking up before the Fed actually started to raise rates? Why? Because they made the promise that they were going to be raising rates in the future and people started acting accordingly. The mortgage rates shot up dramatically even though the Federal Reserve kept moving, right? They weren't working in lockstep. The mortgage rates found their position right away based off of the information that they were hearing from the Federal Reserve saying, hey, we're going to keep raising rates. So the mortgages went right up until they found their demand, where the price of the bond had fallen enough for the investor to jump in. Says, man, that's it. That's my price. That's as low as I need it to be in order for me to get the return that I'm looking for. When that happened, the Federal Reserve was still raising rates. They're not reacting to anything. They're creating the economic environment in the people's mind that they need them to know and think about in order for this situation to occur. They're not reacting. They're creating the expectations. And that's what they're doing. If you look at it any other way, you'll miss it. And that's the problem, the deplorable, is that most people see it that way, is that the Fed is reacting. And if you take in that sort of strategy, you'll miss it. You will completely miss the credible threat theory altogether, and therefore will never understand how it is that you position yourself to deal with it. Because ultimately, you would also say that they're reacting to the lumber prices being elevated, right? They would have to react to that. They weren't. They weren't reacting to that at all. They used lumber as part of the sign of inflation that was not even there. They literally deployed information out there convincing you that lumber prices were going up because of the inflationary scenario. It had everything to do with supply chain, nothing to do with the money printer, right? They created that situation for you to believe. It didn't exist. It literally didn't exist. And the Fed used it, and the mainstream media used it, and every single economist out there was looking at lumber saying, look at the price of lumber go up. This is obviously the Federal Reserve's fault. And I'm thinking to myself, wrong, absolutely wrong. All right. Why did lumber prices come down? Because the lack of demand. It's because we have a very well-established functioning supply chain of lumber that can snap itself right back into production. The moment that happened, all of a sudden there was a ton of supply out there of lumber and not a lot of demand. And when that demand fell, the lumber supply that was elevated at the time from all the production that had happened, when mills are at 1,700 per thousand, they want to produce. They want to produce as much lumber as possible. And they did. And then they overfilled the system and the lumber prices completely crashed. There's no demand, right? The demand for lumber is very suppressed right now. So if you have a well-functioning, well-established, well-working supply chain that is not being restricted and you don't have a lot of demand, tell me where are the prices going to go, right? The moment that the prices move back up and you have a significant demand, you're going to see production ramping back up. Right? And that's what's happening. It's happening right now, and it's going to continue to happen going into the future because I don't see where the builders are getting excited. I don't see that moment of opportunity for them to say, man, if I build a house today or start a house today in 6, 7 months or 8 months or a year when it's completed, there's going to be a buyer there to pick that house up. If they do not feel that, then they are not going to start a house today. You know how much time and effort and energy and investment goes into it? Just to not have a buyer at the other end? Hell no, they ain't going to start. They're going to wait until they feel that the buyer is coming back. When the buyer comes back, they're going to ramp up production. When a bunch of them jump in the game and start buying up the lumber, they're going to find that there's not a lot of inventory out there and the prices are going to skyrocket and people are going to go like, oh, this is obviously manipulation. But yet here it is. I've been calling it out for years ahead of time. I mean, literally, I have not missed a single bit of the lumber market the entire time. People choose not to hear it because they don't like what I have to say. They don't think that what it is that I'm saying is accurate, especially when it comes to the monetary policy, and then they miss it because they really just don't give me the credit that I deserve when it comes to understanding the monetary policy, and it's not even really my understanding of it. It's just the damn documents that I have read, that I have shared with you guys that's clearly stated. It's just like, man, if you just look at these documents, if you just read these particular speeches, it will all line up and make a lot more sense. The Fed is not reacting. They are creating expectations. And it's working for them. They're getting their ammunition back. They have the elevated inflation expectation. The neutral interest rate has come up off the lower bound of zero. They now have a position in which that they can lower interest rates and actually stimulate the economy. And that's something they didn't have 10 years ago. They didn't have it. That was not part of their monetary policy. They did not even have a position in which that they could do that. Today, they got it back. Alrighty guys, I gots to go. You're all awesome. 274 people watching with 93 likes. Be sure and go and hit that like button. By hitting that like button, the YouTube algorithm will grab this video, spread it around for more people to enjoy. And with more people understanding the credible threat theory or understanding the economy in a position in which that they can now use to benefit themselves, we are going to find that the issues that we face as the inequality grows will be less of a burden on us, as we will know how to take position with our efforts, with our time, with our business, with our investments in order to have the best outcome for ourselves, knowing there's nobody showing up. There's nobody coming to create a better environment that says what you are doing on a daily basis is going to be appropriate going into the future. If you do not recognize the changes that you need to make in order to adapt to the current situation we are in, you will suffer the consequences from it. Mainstream media is keeping you in that position. Right? Understanding it for yourself, internalizing these documents, reading through the speeches, and knowing the monetary policy in the way that the Federal Reserve has created the strategy to share with you on how it is that they plan on doing things, it doesn't leave you to the ideas that Trump is going to take over or something like that. Like, none of that stuff exists in that world, right? The reality is that the credible threats are what's guiding markets, and if you can recognize the credible threat ahead of time, you can position yourself to deal with it. All right, guys, Uneducated Economist, you let me know. What was that? Builders aren't building any more small footprint homes anymore because it's just not worth it for the caliber of buyer they would have in the end. Absolutely right. And I've just, let me kind of add to that a little bit. I've talked to quite a few builders. Now I do live in a kind of an expensive area, but ultimately the price tag of the house is where the margin and the profit is. If you build a small ranch style single family or like single level family home, like a starter home, there's not enough profit in it for the builder, right? the land, permitting, material cost, labor cost, everything that goes into it on a smaller home does not leave them with enough profit margin to make it worthy to them. They have to build the biggest, most expensive house they can. And that's the situation we now face. And you're right, to meet the buyer capability. Where are the buyers? They're up at the top, right? Not the day. So it used to be the average day job would have been a buyer. The average day job can't do it anymore. So that average day job buyer who would buy that starter home, they don't exist anymore because they don't buy the homes. It's the upper people. They're the ones who get the homes now. And it's sad and it's unfortunate, but it is the situation we now face. And we can blame all kinds of rich people for their conduction and the way they conduct themselves and all that other stuff. But the reality of the situation is that Cantillon described it hundreds of years ago, that if you have more debt issuance, more new money, you're going to have separation between the rich and the poor, and there's really no better sign of it than the rents and leases that people pay. Okay? So we can blame all kinds of people. There's all kinds of blame to go around. But to understand the underlying economic force, why it's occurring, will give you a much better understanding of how it is that you need to deal with your current position. All right, guys, I gotta go. Uneducated Economist, you let me know.